I think the gold and the silver equities are likely the place to be. I'm not positioning there because I'm positioned. I have this paper coming out of every available orifice. Horrible image, but that's the way it is. I agree a lot with Lobo with regards to copper. I like the copper business because there's any number of copper mines in the world that make $2 or $3 million a day. And I have a fondness for big, big, big deposits as opposed to small deposits. The copper business has treated me extraordinarily well for 40 years, so I'm predisposed to it. I'm a bit more cautious than Lobo, which is unusual, in the near term about the economy. I'm not an economist, but I note that the oil price falls even on flat oil production. That tells me something about near-term demand in the economy, not what people are looking to in the future. But I would agree with Lobo that to the extent that we see copper weakness as a consequence of the global economy, that we view this as a gift. If you look, it belongs to somebody else now. 6 months ago, those stocks were so cheap. You could look at the discussion groups and see that people who had uranium as a component of their internet handle were moaning about ever having been in the trade. It was as delightful a period of hate as I've ever seen. So I strapped on some positions myself just as a consequence of the hate. I've learned in my career, if the reason to own a position goes away, the position needs to go away too. So while I own my core uranium position, which by the way is an immodest position, my trading position now belongs to somebody else. When you are given a gift, depending on the nature of the gift and depending on your own orientation, you need to remember to take it.
Yeah, that's a very good point. And we are going to dive into uranium a little bit deeper in a moment. First, I want to get your thoughts on the gold mining sector here, because as gold reached all-time highs, nominal highs, of course, we didn't see the stocks perform like many people expected them to. People expected the gold stocks to
commodity rises that you have none of. It shouldn't impact your basic values. And the great majority of the purported gold mining stocks will ultimately return to their intrinsic value, which is zero. Investors make fun of sovereign issuers for inflating away the currency, but there's no industry in the world that's better at inflation, which is to say printing phony paper, than the gold mining industry. That disguises the fact that there are qualitatively better companies now than there were in the decade 2000 to 2010. Remember that the most flagrant abusers in that epoch were allowed to pursue other employment opportunities, hopefully in other industries. I would argue further, as an example, with Agnico Eagle, and we've done the work. If you do a net present value calculation on their future cash flows at $3,200 gold and compare it with the net present value of future cash flow, this is a game that requires a lot of work. And I have learned at my conference and your conference that most investors are unwilling to do the work required. Most investors would prefer to feel as opposed to think. For them, they need to be in very, very high quality names.
That makes a ton of sense. I want to dive deeper into uranium now because, as we talked about, there was a slump for basically no real reason that made sense when it comes to the investment thesis. Now we've seen URNM up over 60% since the lows this year in April, and bullish news keeps piling up in a sector that already has a tremendous amount of tailwinds behind it. I think the most bearish thing going for the uranium sector right now is that Jim Cramer has recently come out and said, buy everything uranium, which has caused me some consternation. I hope the Cramer effect does not play out. Which areas of the uranium market right now viewing the, go ahead. Yeah.
Well, following on to Lobo, most of the girls are ugly. So there's no point in trying to kiss them all. There's plus or minus 100 junior companies that purport to be in the uranium space. And we've found 13 that we think are viable. So kissing all the pretty girls absolutely, positively guarantees that you'll get a social disease. No way around that. I would argue again that if the structural changes in the uranium market play out the way I think that they're going to, the biggest and the best are not expensive. They're cheap. Particularly if Cameco can make the Westinghouse acquisition work. It's going to take 3 or 4 years, maybe 5 years, I don't know, for the equity market to insist that the issuers are more transparent about the terms of their contracts. But those who do will enjoy the lowest cost of capital relative to the risks involved of any commodity producers on the planet. And this is a profound change.
I want to talk about oil and gas briefly here because the conflict between Israel and Iran, the 12-day war, whatever you want to call it, so far we've seen a ceasefire that seems to be holding tenuously. It did send oil prices surging on worries that the Strait of Hormuz was going to get closed, that
wouldn't occur. But that ignores a much bigger story. The bigger story is that the underinvestment by the world's oil industry in sustaining capital investments has grown from $1 billion a day to $2 billion a day. The industry as a whole, particularly the parastatal companies, are underinvesting in sustaining capital to the tune of $2 billion a day. You can get away with this for 6 months or 12 months or 18 months, maybe even 24 months. But over time, deferred sustaining capital investments, never mind new project investments, restrict your ability to maintain production. That's just what happens. The other thing is that I think we've learned that the big thinkers of the world with regards to energy, my favorite energy physicist, Greta Thunberg, joined a company where a proven team is developing a copper gold porphyry in the Chilean Cordillera. I'm, as I age, increasingly attracted to the Buffett thesis that ideally you would put all your eggs in one basket and watch that basket very closely. I have never been as good at stock picking as Mr. Buffett, so I've always had to have some diversification to protect myself from myself. But selection in earlier stage companies around people, and people is important. And it isn't just people, it's people performing tasks that they are proven to be successful at. I can't stress that enough. As the company matures, you can take other things into consideration. But this theme, pick a theme, diversification, anything like that. It's less important than an incented team that I would, to this day, prefer to invest in Congo than in California. Part of that is perspective and need, as Lobo suggests. I was able to deliver pretty good gains to clients in the early part of the decade of the 2000s, as an example, taking a lot of political risk. And I took shit every quarter for the volatility in the portfolio and for people who didn't understand what investing in commodities was. As a consequence of that, I invest now on behalf of one client, me. I get along with him fairly well. He's an old, sometimes smart guy who stomachs volatility, who knows that he has to endure 50% losses, drawdowns, to enjoy 1,000% gains. He's got a huge sense of humor for that. It's interesting. When I was listening to Lobo, I was remembering a discussion I had when I first started doing a lot of business with Eric Sprott. We were having...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.